Welcome to Share Market Mastery. Before we dive into the essential guide, let's get inspired. Pause twos. Imagine a life where your investments work for you, creating wealth and opportunities. Pause twos. It's time to transform that vision into reality. Pause twos. Now let's get started with our journey towards financial freedom. Pause twos. Get ready to learn, grow, and succeed in the share market. Scene 2 is coming up next, your essential guide. Hey everybody, Arun Kumar here, and listen up because we're diving headfirst into the share market. This ain't some pie-in-the-sky theory session. We're talking about actionable rules, the kind that'll have you trading like a pro over the next 3 years. Whether you're a market veteran or just dipping your toes in, these tips are your secret weapon. We're going to cut through the noise and get you navigating the market with the confidence of a seasoned pro. Buckle up because things are about to get bullish. All right, folks, let's talk SIEP. Systematic Investment Plan. This isn't some Wall Street jargon, it's your ticket to consistent growth. Think of it like this. You're not throwing a wad of cash at the market and hoping for the best. Instead, you're investing a fixed amount regularly like clockwork. Why is this so powerful? 2 words. Rupee cost averaging. Every time you invest, you're buying at different prices, smoothing out those market swings. That means you're not sweating the small stuff, you're in it for the long haul. And over time, those returns start compounding, building on each other like a money-making snowball. Trust me, SIP is the tortoise that wins the race. Let me tell you something, folks. Putting all your eggs in one basket is a recipe for disaster. You think you found the golden goose, but what happens when that goose flies the coop? Diversification, my friends, that's your safety net. We're talking about spreading your investments across different sectors, tech, healthcare, energy, the whole shebang. And don't forget about asset classes, stocks, bonds, real estate, you name it. This isn't about being timid, it's about being smart. If one investment takes a hit, the others cushion the blow. Remember, a diversified portfolio is a resilient portfolio. Listen, I know everyone wants to time the market perfectly. Buy at the absolute bottom, sell at the peak. It's the dream, right? But let me tell you, trying to catch a falling knife is a dangerous game. Here's a simpler approach. Buy when prices are low, sell when they're high. Sounds obvious, right? But it takes discipline. When everyone else is panicking, that's your buying opportunity. And when everyone's euphoric, thinking the good times will last forever, that's when you tighten your grip on those profits. Remember, buy low, sell high. It's timeless wisdom for a reason. Chapter 4. The Discipline of a Winner. Sticking to your guns. You've got your plan, you're feeling good, and then bam, the market throws a curveball. Maybe there's a correction. Maybe a sector you love takes a hit. What do? You stick to your guns, that's what. This isn't about emotion, it's about discipline. Don't let fear or greed make your decisions for you. Remember why you chose your investments in the first place. Trust your research and stick to your strategy. The market is a marathon, not a sprint, and those who stay disciplined are the ones who cross the finish line with their portfolios intact. Chapter 5, the persistence payoff, weathering the storms for long-term gains. Let's face it, the market is going to throw you some curveballs. There will be downturns, corrections, maybe even a full-blown bear market. But here's the thing, persistence pays off. It's easy to get discouraged when your portfolio takes a hit, but remember, you're in it for the long haul. Those who panic, sell at the first sign of trouble, are the ones who miss out on the rebound. Stay committed to your plan, ride out the storm, and I promise you the sun will come out again. And when it does, your persistence will be rewarded. Chapter 6. Taming the greed and fear rollercoaster emotional investing don'ts. Listen up because this is crucial. Greed and fear are your worst enemies in the market. When greed takes over, you start chasing every hot stock tip, throwing caution to the wind. And when fear sets in, you sell everything at a loss, convinced the world is ending. Don't let your emotions control your investments. Take a deep breath, step back, and remember your plan. Make rational, informed decisions based on research and analysis, not on what your gut is telling you. Trust me, your portfolio will thank you for it. Pause 3S. Chapter 9, Staying Informed and Adapting. In the ever-changing world of the stock market, staying informed is your best defense and greatest advantage. Subscribe to reliable financial news sources, follow market trends, and continually educate yourself. But remember, information alone isn't enough. You need to adapt your strategies based on new insights and changing market conditions. Being flexible and responsive can help you navigate market uncertainties and seize new opportunities. Keep your eyes and ears open and always be prepared to tweak your approach. This adaptability will not only safeguard your investments, but also position you for long-term success. Utro, your 3-year plan starts now. Invest smart, achieve your goals. So there you have it, folks. The roadmap to mastering the share market over the next 3 years. Remember, investing isn't about getting rich quick. It's about building a solid foundation for your financial future. It takes patience, discipline, and a well-thought-out strategy. But most importantly, it takes action. Don't just sit on the sidelines. Get in the game. Start investing today. Stay the course, and I promise you, you'll be amazed at what you can achieve.